right, we are together here in the fourth one-shot revision lecture for house property. We have completed the basics, the agricultural income and the residential status. Okay, and for these one-shot revision videos, I am using these Sarthi DT compiler. This is volume 1 DT, volume 2 is their IDT. You can order from the link in the website or in the app, right? And if you want to prepare quality good for the exam, conceptual learning, writing the booster notes and everything in 52 classes, it will be done. Max, right? For DT, IDT, daily 2.5 hours live classes going on with the recording also. So many of them who are not able to do live because of the job and other schedules, they are also going for recording. So do join it once you invest and you get the result. Huh? Not with me, with anyone. So one shot revision video, definitely everything I'll cover with the alert sign, with the pitfalls. But if you feel that no, you want to practice with a teacher, then please go for the practice batch. Chalo. It's a small head we are revising. I know first head is salary. We'll do it little later. House property gives a boost. Understand the concept, the booster notes, the formats, the pitfall to avoid, and then immediately after this, practice the questions from this compiler, which is not only covering one concept, one question, it's having questions from the past exams also, which are very, very important quality good questions of professional exam level. Okay, right. So let us begin with the revision of the house property. Every head has a chargeability section, and house property says there's an owner, there's a tenant, and tenant has taken a property on rent. Then Aja, chargeability section says section 22, income will be taxable here. Owner-tenant relationship, property could be anything. It's the head's name is income from house property. It could be commercial property, godown, depot, residential house property, anything. When you get rental income, that rental income is taxable in the hands of owner. Okay. Now here, properties are divided into three types. The property which is actually given on rent, it's called let out property. The property which you occupy for yourself, that is you are staying in the house, it's self-occupied property. Or you have one house in Hyderabad, but you are not occupying, it's vacant, unoccupied. You are staying in Bangalore for your job requirement or for your son's education, any reason. Then this house will be treated unoccupied house, or vacant house will be treated as self-occupied house. So let out is there, which is actually given on rent. Self-occupied is there, right? And two houses are allowed as self-occupied house for each individual SSA, right? More than two houses if you are having self-occupied, one in Mumbai, one in Lonavala, one in Goa, one in Darjeeling, oh, two houses are enough to stay. Then more than two houses which are self-occupied or unoccupied will be treated as DLOP, deemed let out property. Ma'am, but it's not given on rent. Then there are some ways in which on notional income you are liable to pay tax. Very simple head, very simple provisions, limited deductions, but separately question is asked. And 15 minutes of your reading time when you read the question, smile and you can start your answer. If you can see, say, question number 4A is house property and you know it, go for it first. Question number 1 is business head and other source and all in combination. It's compulsory to do, not compulsory to do first. House property mandatorily asked separately question, capital gain, house property and salary, and it is also covered in the MCQs. Clear? So how many types of properties are there? Let me open the booster notes and quickly revise from there. Right. Let out property is self-occupied property, right? If the property is used by owner for his own residence or which is unoccupied, yeah. See, you have only one property, but you are staying in Bangalore and you have given that one property on rent. It will be let out property. And what is the self-occupied property where you stay? And the benefit is nil. Two self-occupied or unoccupied properties are there. Right. And vacant or unoccupied house property. What is it? I explained you now. Where the assessee owns more than two house property as self-occupied house, then the remaining property will be treated as deemed let out and taxed notionally. Okay, right. Next now, format on how to compute the income. Okay, we'll study if you go for default tax regime, what happens if you come out of the default tax regime and normal or old regime if you file the return. How the income is taxable. We'll see that. Now, in case of let out and deemed let out, you have to follow this format. First is start with the rent received, that is your GAV. But GAV is called as gross annual value and it's not directly taken as rent received. Rent received may be less. So you have to compare it with the arm's length and other values. Those other values are here. Fair rent is the rent of similar property. Okay, my property is second floor. Next to me, one building, second floor. What will be the rent of the similar area? So fair rent is the arm's length rent. Then we have the municipal value. When you go to the municipal portal and you put your specifications, they'll give you according to the municipal value. Municipal value is not the value of the property. It's the rent derived according to the municipal authority. Standard rent in so many areas, the rent is controlled by the Rent Control Act and they have standard benchmark. Okay, right. And then actual rent received. So these four things will be given in exam. Did you understand the meaning? Any doubt you have, comment below the video or you can message your doubt to 92900 This is the WhatsApp number to click the picture and share your doubts. Fair rent or municipal value, whichever is higher, right? Now we will derive the GAV. फिर से एक बार, what is fair rent? Arm's length value. What is municipal value? Rental expected rent as per the municipal authority. Standard rent is rent as per Rent Control Act and actual rent is the rent received from the tenant. Now, fair rent or municipal value, whichever is higher. This is the step one to derive the GAV. Very easy way I'm teaching. Pick up fair rent or the municipal value, whichever is higher. Step A, or standard rent, whichever is lower. Step B, or actual rent, whichever is higher. So without looking into the screen, look here. It's like high, low, high, tight, waves. Fair rent or municipal value, whichever is higher. Step A, or standard rent, whichever is lower. Step B, or actual rent, whichever is higher. This is your gross annual value with which you will start the computation of let out and deemed let out. Self-occupied, I am not talking. Easy? GAV, fair rent or municipal value, whichever is higher, that or standard rent, whichever is lower, that or actual rent, whichever is higher. चलें साथ में. Okay. So you get the GAV. Municipal taxes I have written here in note 2. They are allowed only when they are actually paid by the owner. Okay, 50% paid by owner, 50% tenant, 50% will be allowed. If municipal tax are due but not paid, no deduction will be allowed. And municipal tax also includes sewerage tax. This is very beautiful. So many times GAV could be fair rent or actual rent, anything. But municipal taxes are given, say, 8%. Of which value? Municipal value. Irrespective ki municipal value is GAV or not. Are you all with me? Huh? So, fair rent or municipal value, whichever is higher, that or standard rent, whichever is lower, that or actual rent. This will give you the GAV. Municipal taxes are deductible only on actual payment basis. And then what you get, you call it as net annual value. 30% of NAV, not GAV. 30% on NAV is the standard deduction allowed. See, when you are owner of the property, you will incur repairs, maintenance, ground rent, liftman's charges, insurance, so many things. So forget about the actual expense against your rental income. Straight straight 30% standard deduction you will take. Next is interest on loan, yeah, and reconstruction interest you will get house property. Okay, if you have two, three house property, house one, house two, house three, somewhere there is loss, somewhere there's profit. Can you set off? Answer is yes, right? So what's the format? Acha, did you take notice that municipal tax are allowed on payment basis? Interest on loan is allowed on due basis. And in total, how many deductions are allowed in house property? Only three. From the GAV municipal taxes on payment basis. From the NAV 30% standard deduction. And interest and pre-construction interest put together due basis. I'm repeating, municipal tax are allowed on payment basis. Interest on loan is allowed on due basis. This is the format. Okay. In case of self-occupied property, you can't pay rent to yourself. Always your GAV will be nil. Municipal tax nil, NAV nil. अब NAV nil है तो 30% standard deduction will be nil. Interest on loan is allowed up to 2 lakh. यहाँ पे लिखो if opt out of default tax regime. It's written down, but just that in self-occupied property, there is no income, but interest on loan, pre-construction and current year put together, it's allowed up to 2 lakh. That too, if you opt out of the default tax regime. That means finally, always there's going to be loss in self-occupied property because income is not there and interest on loan is allowed. Okay, right. Standard deduction is allowed on NAV. Now, for interest on loan, I have already given a doubt clearing. Whenever students say, ma'am, this is confusing, stamp duty is confusing, I come up with the table method. So this is one of the table, very important, mind mapping. You don't have to draw this table in the final exam, but it's very good for mind mapping. Check now. Interest on loan is allowed on due basis. Yeah, right. Due basis. Underline. Let out and deemed let out, full interest is allowed. Let out property and deemed let out property, there's no upper cap of 2 lakh. Full interest is allowed. Self-occupied property. If the loan is taken after 1499 for purchase or construction, you have taken the loan and construction should be completed in 5 years. Then how much interest is allowed? 2 lakh. Condition. Loan is taken after 1499 for purchase or for construction and construction is to be completed in 5 years. Suppose in case of self-occupied property, loan is taken prior to 1499. Okay, ये कम ही आता है. But today also, if loan is taken for repairs, renovation today, यहाँ word add कर दो आपको लिख. आज भी, if you are taking the loan for purchase and construction, 2 lakh. If you are taking the loan for repairs, 2 lakh. If you are taking for purchase and construction, but construction is not completed in 5 years, 30,000. In case of self-occupied, in default. Okay, this is in out of default tax regime. If you opt out of default tax regime, then self-occupied property, 2 lakh or 30,000 interest on loan is allowed. And let out में कितना allowed है? Deemed let out में full interest. Right. You know, students, they see the interest and they restrict to 2 lakh and 30,000. That's only for self-occupied, not for let out. And now, if you are in default tax regime, If you are in default tax regime, same. Let out and deemed let out, full interest is allowed. Self-occupied, nil. No interest is allowed. Ma'am, up to 30,000, up to 2 lakh, kuch nahi milta. I'm repeating, if you're filing your return in default tax regime, self-occupied property, it will all be nil. GAB nil, NAB nil, interest on loan nil, everything nil. Whereas self-occupied property, in case you opt out of default tax regime and you take the loan for purchase and construction, 2 lakh. You take for repairs and renovation, 30,000. Clear to all of you, right? Okay. Take your time and ask your doubts. It's a super flow chart I have made for interest on loan, which is allowed on due basis. Any doubt you have, you can comment. And if you feel it's being super clear, the notes, the quality of the questions, then also comment. The commenting will give it a boost. Chalo. See, same thing I have given in writing. Interest on due basis is allowed. You can take loan from anyone, housing finance company or cooperative housing banks and all. They'll give you a certificate and whatever is interest for the year, it's allowed. Okay? Right. Interest is allowed 2 lakh if loan is taken for purchase and construction after 1499 construction completed in 5 years. Interest is allowed 30,000 in any of the above cases. If loan is taken for repairs and all. Acha, when you pay interest outside India and 100% you pay TDS if TDS is not deducted. Yeah. Interest on loan paid outside India is allowed only if TDS is deducted. Otherwise, 100% disallowed. Are you getting? You have taken housing loan from Spain. You have to pay 1 lakh interest and you forgot to deduct 10% TDS. Pura 1 lakh pay kar diya. That interest will not be allowed. Okay. Now, interest on second loan taken to repay the first loan is allowed. See, example also I have given. I took first loan from SBI, 50 lakhs, maybe at 10%, just an example. Then IDBI is saying, oh, we will to give you housing loan at 8.5%. And housing loan are pretty long, 10 years, 15 years. So I took my first loan from SBI. I took second loan from IDBI to repay my first loan. IDBI से loan करके I repaid SBI and now I am paying EMI with IDBI. Now this second loan of IDBI becomes the housing loan. So will the interest on second loan be allowed? Answer is yes. See, first I took loan from SBI. Housing loan interest is allowed. Now I took loan from IDBI. ठीक है? IDBI से ले लिया हमने. So IDBI is taking the place of the SBI and IDBI interest will also be allowed. Brokerage and all is not allowed. Interest paid on money which is borrowed to pay the EMI. Now sometimes you pay late interest. So you pay interest on interest or penalty interest or to pay interest I have taken the loan. That second interest is not allowed. Only interest on housing loan 1 lakh is allowed on due basis. But I'm not even having 1 lakh. So I took loan from my friend to help me pay the interest. Now to friend I am paying 1,000 interest. Will that be allowed? No. I hope this is clear. You read it. And mark this for very important for solving the questions. If you are going for normal tax regime, that is your other than default tax regime, self-occupied property interest is allowed up to 2 lakh. Repairs is allowed 30,000. Yeah. default tax regime, no interest is allowed. Abhi I told you in the flow chart, default tax regime, self-occupied, no interest is allowed. Let out, I mean, the same self-occupied, if you go for out of the default tax regime, in case of self-occupied, interest is allowed 2 lakh for purchase and construction, and for repairs 30,000. Let out, full interest is allowed on due basis. Okay. One more point we should remember, not for house property, but for solving set off and all questions. In default tax regime, no set off allowed with other heads. House property loss cannot be set off with other heads. In normal tax regime, house property loss can be set off up to 2 lakh with other heads like salary, business head. समझ में आ रहा है? कंफ्यूज तो नहीं हो रहे ना? देखो, default tax regime में house property losses 460 carried forward 460 to be set off in house property. It's not allowed. House property loss cannot be set off with other losses, other incomes in default tax regime. In normal tax regime, house property loss can be set off with salary, with business head and all, up to 2 lakh. Now, self-occupied property. हाँ, अब अगर self-occupied property है, तो क्या करना है? कैसे करेंगे? In case of default tax regime, self-occupied property, no interest is allowed. In case of normal tax regime, it's allowed up to 2 lakh. Repairs के लिए 30,000. Allowed up to 2 lakh किसके लिए? Purchase and construction. Self-occupied property. हाँ, and let out that everywhere full interest is allowed on due basis. Next is the concept of composite rent. Nowadays, houses given on rent with all amenities, club and swimming pool and dining table, refrigerator and AC and blah blah. Then rent of house, house property. Other services, business income or other source. If you cannot split, everything will be taxable under other source or business income, not in house property. Okay. Next are the two correlating concept of unrealized rent and arrears of rent. What is unrealized rent? It's the rent which is due and you didn't pay. February and March month rent was due, but you did not pay that. So it's like a bad debt, like I sold the goods party to sales. हाँ? फिर बैंक में पैसे आए नहीं तो बेड डेट टू पार्टी, पैसे डूब गए. Unrealized rent means this person did not pay you the rent of February and March. Then you can't take your actual rent for 12 months. No, you have to take the actual rent for 10 months. It's allowed to not take the rent for the 2 months if 4 conditions are satisfied. Unrealized rent is deductible from actual rent receivable in step 3. You remember what is step 3? Fair rent or municipal value, whichever is higher, step 1. Step 1 or actual rent, whichever is lower, step 2. This or, sorry, आज थोड़ी सी गड़बड़ हो रही है, सुबह बहुत सारा कैपिटल गेन किया. Once again, orally we'll do. Fair rent or municipal value, whichever is higher. That or standard rent, whichever is lower. This or actual rent receivable, whichever is higher. So in actual rent receivable 12 months, if 2 months rent is unrealized, you are allowed to deduct it and then get the GAV. Allowed है, subject to 4 conditions satisfied. Tenancy should be bona fide. Means there's an agreement between owner and tenant. Tenant should not occupy my property anymore. See, when you are not paying the rent of February and March, bye-bye, you please go. You're not allowed to occupy my property in spite of not paying rent. I'm not doing any charity. Tenant should not occupy any other property. If you're not paying rent tomorrow, you'll not pay rent of that property also, vacate. And you have proved that you have taken enough of legal notices you have sent and it's waste. Taking legal proceeding, आपने कर लिया. Now you want कि actual rent receivable 12 महीने का है, forget it. Fair rent, municipal value, whichever is higher. That or standard rent, whichever is low. This or actual rent receivable, whichever is higher for 12 months. in that minus 2 month in the step 3 only to get your correct GA. ठीक है? अब देख कभी कभी ना orally बहुत अच्छे से आ जाता. Followed or not, all of you? Unrealized rent is allowed to be deducted in the step 3 only, actual rent receivable, provided tenancy is bona fide, agreement is there. Defaulting tenant has vacated, he is not in occupation of any other property. SSA has taken all the reasonable steps to institute legal proceedings and they are all useless. Okay? Right. Unrealized rent. Okay. Now listen what happened. That you did not pay the rent. I asked you to vacate, and in actual rent receivable, instead of 12 months, 2 months I left and I took 10 months. But I have to prove that I have taken legal proceeding. Otherwise, the goods rent you will show as unrealized. Hai na? Now what happened? That time you didn't have money. You didn't pay me February, March rent. 4 saal pehle. After 4 years, we meet somewhere. You're saying, Dipti ma'am, that time I didn't have money. Now I'm doing really good and I want to pay the unrealized rent. I said, forget it. That property also I have sold. I'm not having that property. But you say, no, ma'am, karmic account chalega, aap le lo. So after 4 years, that 2 months unrealized rent I have received. I may or may not be the owner of the property. Is this my income from house property? Answer is yes. Irrespective, I'm not the owner of the property, yes. Will it be taxable? Yes. Only deduction allowed is 30% standard deduction. Look here. That time also, instead of 10,000 into 12, if you would have taken 10,000 into 12, 10,000 per month rent, 12 mahine ka, you took 10 months because 2 months you didn't pay, right? So I took 10 months ka. If there also 2 months are added, at least NAV ka standard deduction to milega na. So I'm repeating, unrealized rent, whenever it is realized, it's taxable as a house property, irrespective of I'm not the owner, 30% standard deduction. इसी का एक छोटा भाई है, उसका नाम है arrears of rent. Unrealized rent is rent due, you did not pay. Arrears of rent is increase in the rent with retrospective effect. Listen, tenant, I was saying you, I want instead of 10,000, 13,000 rent since 3 years. I'm saying rent बढ़ाओ, आप नहीं बढ़ा रहे, आप जाओ खाली करके. So my tenant is saying, no, Dipti ma'am, I'll pay the 3,000 extra rent from this one. I said, no, not now, 24, 25. I want increase in the rent from 10 to 13,000 retrospective effect from last 2 years. मुझे ना April 23 से 24, 24 मेरे को पूरा extra चाहिए. So arrears of rent is increase in the rent which is retrospectively given and now you have received. I hope you are getting. That time you paid me 10,000, I agreed. Now you are ready to pay 13. But I want you to pay 3,000 extra for last year also. This is all received now. Is it my income from house property? Yes. It's again taxable 30% standard deduction. So what is taxable as 30% standard deduction? Huh? Unrealized rent received, arrears of rent received, tax it separately. Students know that 30% standard deduction देंगे, but you know they add it in any other house. ऐसे नहीं करना. समझ में आ रहा है? Little in depth I am taking the question so that you all can avoid the pitfalls. So unrealized rent, whenever it is received, it will be taxable. Yeah. Even if he is not the owner, and 30% standard deduction. Arrears of rent is increase in rent, it will be taxable 30% standard deduction. ठीक है? Nowadays, if you have a business of letting out of the property, still your income will be taxable in income from house property. But if it is a case of subletting, like I am the owner, I have given it to a hospital tenant. Hospital has given one part to canteen, one part to medical shop. Now medical shop and canteen wala is paying rent to tenant. Who are they? Subtenant. So in the tenant hand, this will be taxable as income from other sources. Why, ma'am? Because I am the owner of the property. I have given it on rent to hospital. Hospital is not the owner, they are the tenant receiving the rent from subtenant. ये ना शायद मैंने स्टार्टिंग में ही दिया है, टैक्सेबल होगा. Yeah, income from letting out of the open plot. We have done this. Income from other source में, because there's no property, it's an open plot. You have given on rent to Patanjali ka yoga camp, yes, circus, other source. Advance rent received is not taxable when received, but in the year when it is due. So many times advance rent is paid as deposit. It's not taxable. You know, when I ask someone, okay, you can be my tenant, 20,000 will be the rent, 1 lakh is the deposit. 1 lakh matlab 5 months rent you have to give as deposit, as advance. Is this taxable income from house property? No. One more term, once or twice they have asked in exam, is annual charge. Okay. So annual charge is paid by the owner. Annual charge is paid by the owner. What is annual charge? Okay, the system was down. Okay, last part I'll explain you orally. That is about annual charge. You know what is annual charge? Like my father has transferred a property to me. My father has transferred a property to me, and that property I have given it on rent. I can enjoy the rent by will or inheritance. My father transferred the property to me, but with the condition that every month I should pay 5,000 to my mother, or every year I should pay 50,000 to my mother, irrespective of how much rent I'm getting. I'm repeating, father has made a will that my whole house belongs to my daughter and she can enjoy the rental income only 50,000 per month. So this fixed amount when you have to pay, that's called annual charge. Is it allowed to be deducted? No. House property is narrow minded, super easy, super clear. What are the three deductions allowed? First is municipal tax on payment basis, that too paid by owner. Second is 30% standard deduction. Third is interest on loan. Other than that, none of the expenditure is allowed. So in exam, if they give you annual charge, nothing you have to do. Read it now. It will be clear. Annual charge ना आपको कुछ भी नहीं करना है. It is paid by the owner to relative, usually out of the rental income by way of will legacy. Annual charge is not deductible, hence ignore it. ठीक है? चलो. Yeah, this one is very beautiful. Now see, nowadays there are so many real estate people who are dealing with the stock in trade. They buy the house, they sell, they buy open plot, make bungalows and gated colonies and sell. So buying and selling the property is their stock in trade. Okay. So whenever this stock in trade is ready, so many times it happens that say a tower is ready to occupy. Occupancy certificate is also ready. But it's just to let for sale board lagaye, it's not sold. Then very clearly they have given in house property that if the real estate person is treating, is that stock in trade. Stock in trade आप treat कर रहे हो for this property, and this property is not sold or not let out, then the year when you get the occupancy certificate, from that year ending for 2 years, it can be vacant and no tax. After that, you will have to pay notional tax. I think better with the example, it will be clear. And then we'll go to the partition and ownership and all that concept. Here they go. A specified head of the charge is provided house property. So if the property is head is taxed as stock in trade and however the annual value of the property would be treated as nil for a period of 2 years from the end of financial year in which certificate of completion is obtained, if such property is not let out during that. Okay. So Mr. Beans is involved in the real estate. He got certificate of the completion for a building from the corporation office on 10/12/22. You got the occupancy certificate on 10/12/22. Now what's the year ending? 31st March 23. So from here 2 years, 23, 24, 24, 25. If this house is ready to occupy and it is vacant, no problem. But after 2 years, if neither it is sold nor it is occupied, still it is vacant. From 1/4/25, it is vacant, it will be taxable as deemed let out property. Is this clear to all of you? Sure. Okay, next one is simple concept. If two brothers are fighting, A or B, whoever is receiving the rent should pay the tax and taxable, irrespective of that ownership is disputed. A is saying mera ghar hai, B is saying mera hai. Income tax is saying you keep fighting A and B. Right now, who is keeping the rent? A, no? Pay the tax under house property. Arrears and unrealized rent, whenever it is taxable, tax it separately with 30%. Ma'am, they didn't say 30%. Still, you have to take 30% standard deduction. Okay? Right. These are now all the problems related to how to derive the GAV properly. Here I wanted to take up a concept. I actually want to take it from here only, where I have written. House property जहाँ शुरू हो रहा है ना बेटा, fair rent or municipal value. Here I have given. What are the high-low? Fair rent or municipal value, whichever is higher. That or standard rent, whichever is lower. That or actual rent, whichever. ये आपका GAV आ गया. But now, if the property is vacant, I have let out the property for 9 months and it is vacant. खाली पड़ा है. To let का board लगा है for 3 months. Now, if the actual rent is low only due to vacancy, actual rent is low because it's 9 months rent, whereas fair rent, standard rent, all you have taken for 12 months. But this is for 9 months. And if actual rent is low only due to vacancy, then take actual rent as GAV. Is this clear to all of you? Yeah? I hope you are getting. See, I may be saying it for the 10th time, but this is a super clear method. And after that, you solve problem number 1, 2, 3, which is solved. Answer is also there. You will be 100% sure that GAV correct. Or if the GAV goes wrong, the whole question goes wrong, beta. So fair rent or municipal value, whichever is higher, that or standard rent lower, that or actual rent, whichever is higher. But if actual rent is low only due to vacancy, then forget B or actual rent, which is higher. Take GAV as actual rent, irrespective of other values. Okay? Right. Okay, so this was a very important point. This is also very important. This table, I'll separately take old versus the default regime, where I'll take all the heads combined. But whenever we are completing the head, we can take it. Unrealized rent and stock in trade and all. So I want to repeat, if actual rent is low only due to vacancy, still take actual rent as GAV, even if it is low only due to vacancy. Now, these kind of combination problems are asked in exam, that you have 3 houses which are self-occupied. Any 2 of your choice you can treat as self-occupied and remaining let out. So first you solve as if all of them are deemed let out. Then you take as if all of them are self-occupied. And then you can work out these 2 are SOP, DLOP. These 2 are SOP, DLOP. This one is DLOP, and like that you can work out and give a conclusion whichever is beneficial. I want to repeat, this is a study material question, but here very important is, if you take the combination 3, like house 1 is DLOP, 2 is self-occupied, 2 and 3 put together, how much is the interest? 30,175. For two self-occupied property put together, the limit is 2 lakh. यहाँ गलती होगी, pitfall, ध्यान रखना है बेटा. Two self-occupied property, it's not ma'am. House 1 के लिए 2 lakh, house 2 के लिए 2 lakh. ऐसे नहीं होता. House 1 and house 2 put together, it is 2 lakhs. Okay, right. Very nice level of the questions are there. Acha, in exam, if they ask you co-ownership, that Raman and his brother are co-owner. So compute the income from house property, routine, fair rent, GAV, municipal tax, NAV, interest on loan and all. And finally, if your income is 96,000, co-ownership ratio is given. Nothing given, you can take 50-50%. Okay. Chalo. Now let us do the partition question. Look at the screen, please. If one house property's total value is given, fair rent, municipal value and all, 50% ground floor is let out to a showroom. 50% is self-occupied and ऊपर का 50% मतलब 25% and 25% is used for own business. The part, these are very important combination problems repeated 3 to 4 times as it is. If 50% is let out, 25% is self-occupied, 25%, this I have done percentage. They can give area out of 1,000. 500 square feet is this, and 25 is this, and 25 is this, like that. Okay? So if they give like that, then how will you proceed? Okay. Oh God, the topic is easy, but then today some power fluctuation is there. Anyhow, we are back now. Sorry if the link is broken in the revision. Let us take the partition concept quickly. If the property is, say, partitioned, yeah, 1 second. Yeah. Okay. If the property is partitioned, 50% is let out, 25% is self-occupied, 25% used for own business. Then the part which is used for own business, don't make a column for that. While computing house property income in column form, you make two columns, one for the let out and one for the self-occupied. Okay. Now, suppose if they have paid municipal tax 50,000, 25,000 you can deduct here, 50%, 25%. Okay, of 50,000 that comes to 12,500. Self-occupied may to not allowed. So like that, interest on loan and all the deductions will be allowed proportionately. And now coming to the unit which is used for business. See, let out and self-occupied, only three deductions are allowed. Municipal tax on payment basis, 30% standard deduction, interest on loan. ठीक है ना? Self occupied है तो up to 2 lakh and all, and let out है तो पूरा total interest on loan is allowed. This is fine. But 25% which is used for own business, whatever are the expense, can you claim 25% on actual basis? Answer is yes. Insurance, municipal tax, ground rent, whatever, liftman's charges, water charges, or interest on loans, stuff. Huh? So that's what I've given it here. And if they give the fair rent and municipal profit value of the whole property, only 50% is let out. So you'll have to take 50% carefully. Huh? ये देखो मैंने लिया है fair rent or municipal value का 50% because 50% is let occupied. And this one is same problem asked in exam also. Very, very important. I'm going to take top 50 questions in the live class in YouTube later when you complete all your portion. So subscribe to the channel and stay connected. Okay. There I'll solve all this. But just to share with all of you, say Ria is having a big house, 3 units, 50% is let out. And 700 is unrealized rent. So it's reduced from the third step only. 25% is used by RIA for own profession and 25% is self-occupied. So only the let out and self-occupied you make a column and solve it. And the one which is used for business, 95,000, 25% of expense on actual basis, all you take. Municipal tax, repairs, interest, ground rent, fire, sub le lo. So you will get the answer. This is how you solve the partition questions. Okay. Right. Now, last one, when the property income is, say, received rental income in foreign currency. So they'll give the dollars and they'll give the conversion rate. So convert the dollars into the rate. Okay. That is on the last day foreign currency rate, buying rate. And you can compute the income. Okay. So very important here is, say, we are taking like this. Okay. Indu is having a let out property in USA. $1,500 is the rent per month for 12 months and per dollar is 60 rupees. So you can convert it into rupees. Now municipal taxes paid $1125, not per month, yearly ones. Each dollar is 60. You have deducted. And then standard deduction and on. Self-occupied will be nil. Only interest on loan is deducted. And let out portion, routine, because it's 50% let out, 50% interest is deducted. So like this you can compute, and if somewhere there is loss, somewhere there is profit, can you set off? Yes. Now comes one of the important concept, that's the concept of pre-construction interest. Pre-construction interest starts from the day you have taken the loan. Okay. And it's other than regular interest, and it ends on repayment of loan or 31st March, whichever is earlier. So obviously loan though no one will repay. So whenever construction is completed 31st March prior to that, this period interest is allowed as pre-construction interest, 1/5 every year. You understand the logic. I constructed a property from April 19 I was doing. Construction was over in June 21. So 21 onwards तो I will let out. June 21 के पहले March कौन सा आ रहा है? 31st March 21. So now 21, 22 तो I will let out, and against let out I can deduct interest. What about 19 to 21 interest prior pre-construction interest? The day I started my construction, my interest meter started from 1st April 19. But that time there was no income. Income started from June 21 when construction of the property was ready. So whenever construction is completed before that 31st March, pre-construction period ke liye I have made some steps. It looks little lengthy, but it is very scoring. I'll take you to the notebook and share, so that will become very easy. Here they go. These are all the booster notes I have given for interest on loan. We have solved the questions in the practice batch, but I want to show you the concept of pre-construction interest. Say the loan is taken on 1/4/19, 1 lakh rupees loan at 10%. Construction is completed or ended on July 20. So July 20 matlab till 31st March 2020. 31st March prior to completion of construction, this period interest where I'll deduct, that's a problem. Because after this to 2021, whether it is self-occupied or let out, you can deduct interest. Until 24-25 loan is not repaid. I'm going to give you time to take a screenshot, but this is a very, very nice question. बहुत अच्छा है. ये देखो. Pre-construction period starts the date of loan, 1/4/2019. It ends 31st March prior to the completion of the construction, 31st March prior to the completion of the construction. So this time it's 12 months. It could be 18 months, 13 months, kuch bhi. Now, 1 lakh 10% interest is coming to 10,000. Pre-construction interest is deductible 1/5 every year for 5 years. From when? 2021. So year ending 21, 22, 23, 24, 25. For 5 years, pre-construction interest is deductible 1/5 every year along with current year's interest. Ma'am, why did you take current year? Because the loan is not repaid in 24, 25. तो करंट ईयर का इंटरेस्ट भी आएगा और प्री कंस्ट्रक्शन इंटरेस्ट भी आएगा. So total interest deductible. See, 5 continuous years. What's the first step? Pre-construction period starts from the day you take loan. Pre-construction period ends 31st March prior to the completion. So this time it's 45 months. 1 lakh into 10% into 45 by 12. By 12 means 1 month and 45, 37,500. This is the total pre-construction interest. What's annual pre-construction interest? 1/5 is allowed. 23, 24, 24, 25 and so on for 5 years. And current year's interest is also not repaid. So current year's interest, pre-construction interest, put together 17,500 is deductible. And very important is, in case of self-occupied property, current year's interest, pre-construction interest for 2 self-occupied property, put together the upper limit is 2 lakh. See, every time I'm following the same step. Step 1, pre-construction period starts. Step 2, ये लिखने में टाइम कंज्यूमिंग है मैम, बट बहुत जल्दी होता है. Pre-construction period ends. Pre-construction, you are allowed to write PCP. It's your working note. Pre-construction period is 12 months. Pre-construction interest is 20 lakh into 12% into 12 by 20. Annual interest is 240 by 1/5. And it is allowed current year's interest and pre-construction interest put together. It is allowed for 5 years. But this time, pre-construction interest and current year put together is 288. How much is allowed? Only 2 lakhs. Only 2 lakhs is allowed. Okay? Right. 1 second. My class time is over, no? Because there was power cut. I said, let me extend but complete this recording. I don't know. Nowadays, summertime. Generally, power cuts are not there, but we do. So that's all for revision of the house property, the format, how to derive the GAV. Repeat, watch this lecture for 2 to 3 times. Put your headphones and just listen to it sometimes. The concept, what I'm saying, if you're traveling and all, and it's going to be super clear. Okay? And with this, if you go for the practice batch or you go to purchase these compiler book, surely you will do a very quality good preparation. I don't know if you like or not, but I want to say please invest in classes, invest in book. If you're trying to get everything free, notes free, PDF free, practice batch free, A free, you will not be serious. But once you invest 3,000 rupees in the practice batch, you will be after me, ma'am. Can you take this doubt? Can you take 2 more MCQs, ma'am? Can you take more problem for the comparative? And you will get the result. Even if you miss, even if students are missing the class, no, they say, ma'am, by 5 o'clock, can you put the recording so that I can watch it in the evening and cover up and make up for that commitment comes when you do the investment. Thank you so much for trusting me and watching till here. Like, share, subscribe, share it with at least 5 of your friends whom you feel one shot revision will be clear, crystal clear with these kind of the notes what I have given you. Even the question answers are too good, I challenge that. Okay? See you in the next one-shot revision lecture for business it. Do share it with your friends, and why like, share, subscribe, doubt clearing, MCQs, top 50 are all going to come live in the upcoming classes. Thank you. Bye-bye.